Welcome to the Flux Decoded.
Welcome back to the deep dive. Today we're looking at something really high stakes happening in global innovation. We're talking about India's big push into deep technology.
And this is so far beyond, just another e-commerce app or social media platform.
Exactly. This is about foundational science, real engineering breakthroughs. It's about India trying to build a whole new technological identity. Our sources are all pointing to this immense ambition in fields like quantum computing, Spacetech, AI, even climate solutions.
But there's a huge obstacle.
Major one. For these innovators, it's something called the Valley of Death.
And that phrase is perfect. It's where brilliant science it goes to die because the money runs out.
Right. So that's the core conflict we're digging into today.
Yeah, we're looking at a very specific strategic move designed to fill that funding gap. The goal is to unlock India's potential to become a true global leader.
So if you follow innovation in emerging markets, this is a big one.
For sure. It's less about standard venture capital and much more about, nation-scale strategy. The feeling is, I'd say it's calculated optimism.
Okay, so let's unpack this. India has this incredible pool of brilliant scientists and engineers. We all know that.
No question.
So what exactly is deep tech, and why does it clash so badly with traditional finance? Why does this valley of death even exist?
Well, deep tech is fundamentally distinct from what most people think of as tech.
Like software tech.
Exactly. Standard tech, like a new SaaS platform, usually uses science and infrastructure that already exists to, make a market more efficient.
Okay.
Deep tech is built on creating new science or engineering entirely new kinds of infrastructure from the ground up.
Can you give us an example in the Indian context?
Sure. We're talking about startups developing, say, novel battery chemistries or designing next-gen satellite engines.
Stuff that starts in a lab.
Precisely. It's complex AI for drug discovery. These aren't small tweaks. They're massive breakthroughs that had to be proven in a lab long before they can even think about proving themselves in a market.
And that technical risk must be just astronomical, which I assume is where the money people get nervous.
That's the valley of death.
Let's get specific, though. Why do VCs, who are supposed to be funding innovation, why do they back away at this exact stage?
It all boils down to mismatched timelines. This is really the key thing you have to understand.
Okay.
Traditional VCs raise money from limited partners, LPs. Think pension funds, big endowments.
Right.
And those funds have a very strict, non-negotiable lifespan, usually 10 years, maybe 12 if they're lucky.
They have to return them.
You have to return the capital plus profit inside that window.
Yeah.
But deep tech, it just doesn't respect that 10-year clock.
It takes longer.
Way longer. If you're building a new quantum chip, the time from basic research to a minimum viable product, that could easily be 7, 8, even 10 years.
So by the time it's ready for market.
The VC fund is already liquidating. They're demanding an exit. They literally can't wait 15 years for a return, even if that return could be enormous.
Wow. So it's a structural incompatibility. That's the root of it.
It is.
You've got these world-class scientists with ideas that could literally solve climate change, and they hit a brick wall because they need patient capital in a world built for quick exits.
It's a market failure, a structural failure to fund foundational science.
And what's the consequence of that failure?
Historically, it meant that the best Indian scientists and engineers either had to, dumb down their science into something they could monetize faster.
Or they left.
Or they moved overseas.
Yeah.
To places where that long-term patient capital was actually available, often from government grants or specialized funds.
So if you're looking for that kind of world-changing success, you have to find a way around this gap. The talent is there, the capital structure wasn't. And that conflict brings us right to the main event, the strategic countermove that everyone's been talking about in the Indian tech scene.
A direct intervention.
Exactly. A calculated strike against this market failure led by a firm called Speciale Invest. They announced a new fund specifically for deep tech startups, and the size of this thing, it's a statement.
It really is.
Speciale Invest launched a Rs 1,400 Crore fund.
So for our international listeners, let's put that in perspective.
Yeah, what's the conversion on that?
We're talking roughly 170 million US dollars.
Sure.
That is a very powerful statement of purpose in this space.
And the mission is explicit.
Absolutely. It's a strategic intervention designed to bridge that later stage of the valley of death. This isn't just seed money. It's the follow-on capital you need to survive those long, expensive R&D years.
Okay, but let me jump in with the skeptical take right away.
Please.
$170 million. It's a lot for a specialized fund in India for sure. But when you look at the R&D budgets of, say, a U.S. tech giant or the multi-billion-dollar state-backed funds in a place like Shenzhen, is it really enough?
That is the right question to be asking.
I mean, does it risk just creating a lot of hype without the sustained firepower to actually get these companies all the way across the valley?
Look, what this fund achieves immediately isn't filling the entire chasm overnight. That's not realistic.
So what is its function then?
It's the first crucial foundation stone. It acts as a massive validator.
A signal to the market.
A huge signal. When a major player like Speciale Invest commits patient capital and they are setting expectations for longer hold times, it inspires confidence everywhere else. It tells other investors that these long-term bets aren't just science projects. They're commercially viable.
And for the entrepreneurs themselves.
I mean, it's a profound turning point. They now have a credible local option for the kind of deep-pocket long-term support that used to mean moving their company and their IP abroad.
It changes the whole narrative.
It completely reframes it. It goes from you have to leave India to do hard science to India is investing in its own scientific frontier.
To really get our heads around the significance of a $170 million fund for this stuff, we have to, throw out our usual mental models for tech startups.
You really do.
We heard this great analogy that Deeptech isn't designing a new city, it's engineering a new continent. Let's dig into what that actually means.
Okay, let's use that first one. Engineering new land masses.
Okay.
It's a perfect contrast.
Right.
When you fund a standard tech company, like a new e-commerce platform, you're basically designing a new city on an existing landmass. The ground is already there.
You know, the rules, the physics, the infrastructure is there.
Exactly. Your risk is mainly about execution and competition. But Deeptech is like engineering a whole new geological substrate. You're creating novel materials, you're proving theoretical physics.
You're literally creating the landmass that future cities will be built on.
That's it. You're changing the foundational science itself.
Which completely shifts the risk. It's
Yeah.
not just execution risk anymore, it's discovery risk.
Discovery risk. Will this even work scientifically?
Which brings us to that second analogy, which I think is even more powerful when you talk about the money involved. Ambitious Mars missions.
Yeah, that one really hits home.
Investing in a deep tech company is like sponsoring a mission to Mars. You need an insane amount of capital up front.
Astronomical.
You know the R&D timeline is a decade, maybe more, and you have to accept that most of them will fail.
You have to embrace failure. It's an expensive but necessary part of the process. All for the chance at one truly species-level success.
Contrast that with, what, launching a satellite into Earth orbit?
Perfect. That's a predictable trajectory. The financial models are clear, the timelines are short, the returns are smaller, but they're very, very certain.
So Speciale Invest is basically hanging a sign that says, we fund Mars missions here.
They are. They're funding the high-risk, high-reward projects that push the absolute boundaries of science. And that requires a level of investor patience that the domestic scene just hasn't seen before.
It must change the whole relationship between the investor and the founder.
It changes the psychological contract completely. It means the fund is basically saying, we are prepared for a 90% technical failure rate across our portfolio.
As long as the 10% that succeed are transformative.
As long as that 10% delivers returns that don't just pay back the fund, but maybe define the next industrial revolution.
Okay, we've laid out the strategy, the optimism, but this is the deep dive, so we need to get critical. Let's step into the contrarian corner.
Let's do it.
What else has to happen for this RS 1400 Crore to actually succeed, for it to be more than just a flash in the pan?
We have to start with global scale. We said the fund is big for India, but critically, it's still a fraction of what's out there globally.
Right.
The big deep tech funds in Silicon Valley or Asia, they're working with multi-billion-dollar mandates, 10, even 20 times this size.
So what's the risk there?
The risk is that $170 million gets you across the shallow end of the valley of death, but then leaves you stranded when you need the next, even bigger check.
Like for manufacturing scale-up, which must be incredibly expensive.
Exactly. When you need $50 or $100 million for scaling.
Yeah.
So the concern is twofold. One, does this just inflate early-stage valuations without the capital to back them up later?
And two?
And two, if the domestic market can only support one fund this size, who writes the next check? This fund has to be a catalyst that pulls in global or sovereign funds for later rounds. Otherwise, these companies will just hit a different wall later on.
And the money is just one piece of the puzzle. I mean, brilliant science is useless if the environment can't support it.
The ecosystem.
Yeah, what are the ecosystem shifts that have to happen? What does it really take to grow these deep tech oak trees in India?
It demands fundamental reform in how industry, government, and universities work together.
For instance?
First, talent retention. That's critical. If you want these scientists to stay and build, the money has to be matched by a research environment with world-class infrastructure and competitive pay. You have to stop the brain drain.
And that means universities have to change, right?
They have to get much faster and more flexible about licensing their IP and spinning out companies.
Our sources also pointed to the regulatory environment as a huge potential bottleneck.
Oh, it's a massive hurdle.
Deep tech isn't just code. It's specialized equipment, sensitive data, weird hardware. How does India's bureaucracy handle that?
Not always well. You're dealing with importing highly specialized parts, complex customs clearances for scientific gear, and, ambiguous rules around data or manufacturing.
So if the bureaucracy moves at the speed of e-commerce,
It will kill a deep tech company's timeline. Dead. The investment has to be matched by a proactive, responsive regulatory system that fast-tracks these nationally important science projects.
a success isn't really about the size of this first check.
No.
It's about whether that check inspires coordinated action across the board, government policy, academic culture, regulatory speed. If the ambition outpaces the support system, this 1,400 crore won't reach its full potential.
Not a chance. The money is the fuel, but the government and academia have to provide the fertile soil and, clear the path to market.
So let's wrap this up. What's the core takeaway from this deep dive? The RSP 1,400 crore Special Invest Fund is. It's a crucial, audacious first step. It's a powerful signal that India is ready to play the long game in global tech.
It completely changes how people think about risk in Indian deep science.
So what does this all mean, then, for the future of innovation?
It means this fund has to be a catalyst.
Yeah.
It has to spark systemic reform. It needs to bring in more investment, sure, but more importantly, it has to force those ecosystem changes we talked about in regulation, in academia.
To attract the global players you need for critical mass.
Exactly. This is a starting gun for a decade-long journey. It's not the finish line.
The investment definitely validates the incredible potential in India's deep tech scene. But if you look deeper, you have to ask the final question.
Which is,
could this bold, audacious fund ultimately fail? Not because the ideas are bad, but because it doesn't immediately force those parallel shifts in government and academia needed to keep the talent and build the infrastructure. Could a singular investment fail to become a sustained national movement? That's the structural challenge that's still on the table.
That's the today's Flux Decoded. What's your call on this? Let us know in the comment section. And for such quality content, please do like and subscribe to the Startup Junction. Have a wonderful day.